family mode.
Good morning, good afternoon, everyone around the world. How's everyone is doing this beautiful Wednesday morning? My name is Eric. I'm the founder of Elliott Wave Forecast. And we're going to try over the next 2 hours to explain to the whole the whole world technically how we see Elliott Wave in the current times. We're going to start the class in about 5 minutes. And like I say, it's going to take about 2 hours. First, we're going to cover what it is, the basic Elliott Wave. And then we're going to explain to you all reason for the adjustments. I recommend that you guys all to have an open mind and understand that time had changed and that it is not the same Elliott Wave that it was developed in the 1930s to what we have today. Why? Because the market had changed. I want to be clear and saying that I'm going to try to implement some rules. There are going to be hundreds of people here, no members, people here, or traders with a different level of expertise of Elliott Wave. And I'm going to cover, and you guys can ask me questions, but I would like to appreciate that you guys allow me to finish the topic, and then you guys ask me questions so we don't lose the flow of the market. I'm sorry, the flow of the session. So technically it's going to take about 1 hour and 45, 2 hours. And I expect to you guys enjoy it. We're going to develop and show some of the techniques that we have developed. We own the copyright of all these products that we're going to develop, that we're going to show to you guys. And we have developed this for a reason that we do understand that the market has changed and that the theory is not enough to be to trade in today's market. Technically, I don't think it's enough. And over the years, with my trading, I have been able to notice that Elliott Wave, the way it was developed, was not enough. And we do our work in order to make it better. That's life, right? Don't you guys agree? That's life. So to grow and make everything better, no, keep doing or keep seeing and doing things exactly progression. That's life. Not doing things the way that it was discovered 100 years ago, right? So that's more or less gonna be the idea of the class. It's free, it's for the whole planet. And at first, I would like also to thank everybody there that is in attendance today. I hope that I'm gonna take your time and that it's gonna be worth it, the idea that you guys gonna learn. All right, that's the way it is. All right, so let's wait. We're gonna start in about 2 minutes. And I hope you guys enjoy it. All right. I hope you guys enjoy it. Most of you guys are gonna see something that you haven't seen before. And like I say, an open mind. An open mind. An open mind is good morning, guys. Good morning, everybody. Good afternoon. Like I say, we're gonna start. It's 9:51. We're gonna start at 9:53 sharp. I'm gonna allow you guys all to ask me all the questions you guys want about Elliott Wave and nothing. It's gonna be okay. We do these seminars every single day, so we used to deal with this, and it's gonna be great. You guys gonna see it. Remember, guys, progress is what makes human beings. I mean, if we keep doing what we were doing 1,000 years ago, We haven't have a plane. We haven't have computers. We haven't have anything. Progress. And most waivers stay in that state of mind when you want to keep doing what was developed 100 years ago. So we are in the progress side here. So that's what Elliott Wave Forecast been doing for years, trying to find a better way, because I cannot take the old way 100%. So otherwise there was no progress, right? That's the idea. Hope you guys understand. Open your minds. That's the idea, guys, that you're gonna see it right now. Yeah, we're gonna publish the recording when we have it ready. In about an hour later, after we finish, we're gonna have recording ready, and we're gonna tweet it out. It's a free seminar, so it's a free seminar. The recording is gonna be available and gonna be public. Yeah. You're welcome, my friend. Okay, guys, so again, here we go again. It's 9:53, and we're going to start the session. Like I say, my name is Eric. I founded Elliott Wave Forecast 11 years ago. It's going to be 12 now. Time flies. I was a trader like most of you guys. My background, I have 3 engineers, and technically, all my life, I've been a math guy. In other words, I always been good with numbers. I come to trading and I started like most traders. I started doing what the broker provide me. We watch indicators, the news, a lot of stress in front of the computer every time that the non-farm payroll comes. That on Thursdays, these are the news that I remember. The non-farm payrolls every first of the month, a Fed decision, the Michigan report, I think it's on Fridays, things like that. I always in front of the computer. Then I saw the market, like the broker want me to see the market, which is through the platform or the NT4 platform, and starting trading. And with time, I kind of noticed with time, yeah, the video is on, right? You guys are able to see the video, right? So with time, I started seeing that it wasn't so, that something was behind the market, right? Because I noticed that there were some patterns that starting to repeat. And I remember being in my house, and talking about 14, 15 years ago, I remember being in my house with a big board, and I knew the Fibonacci numbers from my engineer background. And I noticed that the Fibonacci numbers, they were present in the market also, besides the broker gave me the Fibonacci retracement. And nothing. I comes across Elliott Wave, and I fall in love. I say, yeah, it makes sense. It makes sense that the same way that the history repeats itself, that the market will repeat itself. It makes sense. Life is a continual repetition of event, and so is the market, because the market is created by the same rules that life is created, which is the nature of the planet, right? And nothing is rendering. We all have the same size. Some people gonna be 6 feet, 182, another gonna be 190, another gonna be a little shorter, like a 150, but the ratios of all are the same. So that's how I started with the Elliott Wave things. And I comes across and I started practicing Elliott Wave. I remember, like everybody, I started reading internet about Elliott Wave. I started reading about books about Elliott Wave, and I started getting very deep into the concept. I start seeing the patterns, and that's when I start getting more professional into the veins. And nothing. Years later, I create Elliott Wave Forecast, very successful. We have gained enormous amount of space in the market. And the biggest reason why we have created that much space in the market is because we noticed that a change was needed. And we started applying rule. We follow the main rules of Elliott Wave, and we started applying and noticing that there was some change needed, and we started develop the change. We didn't wait for nobody to provide us the change. We developed the change. And that's how we got into the whole things. And Elliott Wave Forecast has been able to take a space against every competition because we're different, right? Most of you guys have seen charts of us which we label WXY or 1, 2, 3, 4, 5. We're different, right? And the result are there, and the reason is because the open mind to the change. So in today's class, we're gonna give you, as the first part of the class, we're gonna cover the Elliott Wave Theory, the history and nature, the sequence and the Fibonacci sequence, the different Elliott Wave structure, how to read Elliott Wave charts, different degrees of Elliott Waves. And the second part, which is the most important, we're gonna, the reason for the adjustment, the key adjustments, and a look at some examples in the live market. And at the end, I hope that all you guys becomes a better waver, right? Because I'm assuming that most of you guys practice Elliott Wave, and assuming that most of you guys has been burned by Elliott Wave. How many times don't you see a 5 weights, clear cut 5 weights, and the market doesn't respect the beginning of the 5 weights? And then you say, what's going on here? That's what's going on is that you're trading based in something that it was developed in 1930 in a Dow Jones Industry Index. Very key right there. Was developed in the Dow Jones Industry. It was developed when there was no internet, there was no computers, that the trader, or in this case, yeah, a trader, Elliott, didn't see all the instruments across the planet. And that makes a huge difference overall about what you're doing. Because you cannot pretend only trading one instrument to have a professional higher degree result. No way, guys. It doesn't work like that. So that's what we want to try to accomplish here today to make you guys much better, right? Now, let's start covering a little bit of Elliott Wave. This is basic stuff. Elliott Wave, everybody knows, it was named after Ralph Nelson Elliott. He started with the Dow theory, and he found that the market follow like a nature repetition of the patterns. That's the idea. And he noticed that that the market goes in patterns of 1, 2, 3, 4, 5, and then he put back in what he called an ABC, right? That's the main idea. He did a lot of study, and he came out with a great discovery. Don't get me wrong. Nothing wrong with what he did. I appreciate it. I love it. Great. And a great discovery for that time. It's like a right now. Let's put an everyday example. The guy that designed today a BMW didn't discover or develop a car, right? It's not the same guy, of course. But I guarantee you that this guy that designed that the BMW machine, that they call it, is much better car than a Chevy from 1900s. It's a better car, right? Don't you guys agree? Everybody there? Don't you guys agree? It is a better product. It's a better car. Now, my question to you guys all is, why you guys gonna continue to ride a 1900 car when you can ride a BMW? What do you think? Everybody there. Does that open your mind? Everybody, does that open your mind and say, oh, that's true? Well, that's an example. That's it. Yeah, but you don't want to ride. You cannot compare the powerful, the better machine that is a 2016 BMW compared to the Chevy in 1900. And like I say, nothing compares to that. And what most people have been doing right here using Elliott Wave is riding still the car for the 1930s. When the war is giving you guys tools to ride the BMW, but people don't want to ride the BMW. Why? Because people don't want to change. And that's what we have done in Elliott Wave Forecast. We have changed because change is needed. And if you don't change, the market is going to take your money. That's the bottom line, right? And everybody's here is or pretend to be professional trader, that by definition is that you can make a living out of trading. So if you don't change, you won't be able to make a living out of trading. I guarantee you that, because that's the way it is, right? So that's the idea about Elliott Wave. Like I say, he identified, and this is something that I appreciate a lot, all right? Exactly, Ben, that if you don't change your life, you won't have the change, and you're gonna be left behind in the past. One of the things that I appreciate here, guys, about the O theory, like I call it, is that he knew that within the big patterns, there were small patterns. And that's key, because as a trader, you guys need to identify the degrees of the market, because the market is a sequence within the sequence and a sequence within the sequence. And everybody's seeing now the dollar making a killer, right? At this stage. Yeah, and if you look at the 1 hour chart of the dollar, you say, oh man, this thing goes to the moon. No brainer. But when you look at the yearly chart, it's when you need to say, I'm starting to enter these areas. And that's something that Elliott right here was great in being able to see. Without those tools that we have today, he developed that. Great. I love that. Great. Now, you see the border lines, the border letters right there. And I mean, that's when I start my disagreement. And he say that the market trend in 5 weeks and correct in 3. I think he's wrong there. I think he's wrong, with all due respect. I think that is wrong. And I'm going to prove it at the end why I believe that. And we're going to interact a lot. And we're going to be able to, I'm going to ask you guys questions. You guys going to interact with me. And you guys say, okay, you're right or you're wrong. But this is the first disagreement that I noticed about Elliott Wave. That not every trend is in 5 weeks. And then the market trend in 5 and the market trend in 3. Now, also, this is the typical Elliott Wave structure, which is 1, 2, 3, 4, 5, when the main rules are that the wave 2 never gonna pass the beginning of wave 1, that the wave 3 cannot be the shortest, and that the wave 4 right there cannot enter the peak of the wave 1. Great, and we have not changed that. We have add some new rules to the 5 waves that we're gonna cover down the road. But this is what every new waver needs to know about the 5 waves that we have over here. 1, 2, 3, 4, 5. That wave 2 cannot pass the beginning of 1. That wave 4 cannot touch this, and that wave 3 cannot be the shortest of the 5 advances in the 5-way move, right? So now that's the 5-way advance. Everybody with me? Everybody understand what 5 ways are, right? Rules that you can apply on it. That wave 5 needs to have momentum divergence with wave 3. That's key. That each subdivision needs to be in 5. And the reason why I say that is because most waivers, in order to force the idea, of the 5 ways, avoid or overrule and they start laboring 3 ways in one of the 3 subdivision in an impulse. They labor as a 3 because you know why? Because you don't have an open mind, and because you are afraid to labor in 3 ways, and because you still riding the car for 1930s. And that's something that most of you guys needs to understand. You guys go over here and you guys gonna see, for example, this chart over here, and in this chart right here needs to apply in the way that you see over here in this chart, guys. This is 1, 2, 3, 4, and 5. This one needs to have 5. This one needs to have 5. I understand that in the shortest cycle, it's hard for the human eyes to be able to see the 5. I understand that by nature, wave 1 always is choppy. Why? Because it's an old train or an old cycle start fighting with the new cycle. In Elliott Wave Forecast, we talk about cycles. We talk about sequence. And we use Elliott Wave as a language. Because for us, Elliott Wave is a language. And I'm going to explain down the road more about that concept. But everybody needs to understand that 1, 2, 3, 4, 5 needs to go. This one is 5. This 5, it is 21. When this one, this is a 1, this is a 1, this is a 1. 5 waves, 5 waves, 5 waves. Everybody understand that concept, right? Everybody understand what I'm trying to say. It has to be momentum divergence here. It has to be momentum divergence here. Now, over here also, this is the 5 waves to the upside, and this is the 5 waves to the downside. Technically, is the same, and that is Elliott. That is Elliott typical classic, put in that way, typical classic discovery, which is the 5-way move in Elliott Wave. No question asked that everything here, nothing is rendering. Everything is being computer-wise nowadays. Put in this way, I don't want to use the word manipulated, not to create controversy. Elliott Wave Forecast members know my opinion, but everything follow the natural rules of the Fibonacci. In other words, everything goes between extensions and retracement. And extensions in Elliott Wave forecast or in the new Elliott Wave, extensions are 618, 100, 1.236, 1.618, 2, 2.618, those in the top. Retracement is 14.6, 23.6, 3802, 618, 74. You guys maybe do not understand how it works. Let me explain to you guys how it is. Everything goes to the complete number in math. A complete number in math is 1, 100, 1,000, a million, 100,000. That's what is called a complete number. Now, if you go and you look at the Fibonacci retracement, you need to notice something. You see right here that we have 6 extension, 6 retracement, right? Over here, 1, 2, 3, 4, 5, 6. If you go from the outside and you start adding to the in, you're gonna see how you get the 100. 85.4 plus 14.6, it gives you 100. 23.6 plus 76.4, it gives you 100. 3802 plus 618, it gives you 100. Everybody got it, right? Everybody saw what I did. I added this number to this number, this number to this number, and these two. Your body is designed in the same way. If you go from your shoulder to the from the floor to your shoulder and you add your head, that's gonna be 100. And that measuring is 618, I think it's 76 for 23.6. If you go for everything measuring to the 100, and your 100 in your body is for the feet to the head, to the top of the head. The market works the same. Everything goes to the 100. And we, in Elliott Wave Forecast, we apply that concept in an everyday charts. We go and we label as the 100. We don't label rendering. We don't label a wave 3 if it doesn't have 1.618. And we understand that if the wave 3 is 1.618, the wave 4 should be the 3802, which is the 100. 1.618 plus 3802, it gives you the 100. That's how we do things in Elliott Wave Forecast. We don't label or forecast rendering. We do everything around the math. And guess what? Which one of you guys here knows what is a high frequency trading machine? Everybody here. Who knows here what is a high frequency trading machine? Everybody knows? Yeah, you know, Panos, because you've been around. Everybody understand what is the high frequency trading machine, right? That's the market. That is the market. Those are the one ruling this market, right? That's the market. And we understand that concept. We understand the concept. And technically, what we do is very clear. What we do is we label like that. We label with having in mind how the machines are going to react. Which one are the areas using these Fibonacci levels that I explained to you guys, how the market is going to bounce and react between areas. And we apply many concepts like the no enemy area, the string, the bonus time. Those are language that we use in trading. We only use Elliott Wave as a language. So our members know this is corrective, this is impulsive, this is trending in a corrected way, and things like that. That is what makes us different, because most of our competition do not think and react or act like that. Most our competition is 1, 2, 3, 4, 5, ABC. And that's why we gain space, because we looking at the market with a different mind. Needless to say, we are not perfect. If you pretend that a human being can be perfect in this, you're wrong. Not even the high frequency machines are perfect. What is the difference between humans and high frequency machines? That the high frequency machines, they have an invalidation level, and they have filters that when the invalidation criteria is invalidated, they switch and they start the repetition process in the other side. You need to have that mentality as a trader, as a forecaster. Otherwise, you will be lost in this jungle when everybody's trying to eat you. Everybody's trying to get your money. So at the beginning, I say you need to have an open mind, and you better have an open mind, and you better change, and you better ride the BMW instead of the 1930 Chevy. Because yeah, and nowadays you go to Cuba, and in Cuba there is a lot of old cars. Yeah, it's fancy, but they are not powerful. So this is about a jungle when if you don't win, you lose, your money is taken for somebody else. And that's the way I do see the market, and I always see the market in that way. All right? In that way. Exactly, guys. No emotion in trading. Now, so this is the Fibonacci. Any question? Everybody understand what is an extension, what is a retracement, right? Everybody with me? Let's keep going. Now, we're going to go now to the cycles. And the cycles are amazingly important in this. Amazingly important in this. Why? Because you need to understand that the market has different degrees, right? The market has a degree that is a yearly chart, which is the grand super cycle. It's amazing charts. But the market also have the minute charts, which is the 5-minute chart, 15-minute chart, 1-minute chart. So you need to understand that right now you can be bearish the euro. Got you. You can be bearish the euro in 4 hour, in daily, in weekly. Got you. You can be bearish the euro. But you need to look at the yearly chart of the euro to see where you are. Otherwise, you can ride for the time being the bearish in the euro. But one day, you're going to get a present surprise. Because that's how the market works. A waver needs to understand the cycles of the market. And that's why most of you guys that they are not members of Elliott Wave Forecast, you guys see that we talk about a 15-minute cycle is ending. Nobody used that language. Don't you guys agree? Nobody used that language. It's because everybody else is riding the 1930 Chevy instead of the BMW. In this regard, we need to give Elliott a big applause. Why? Because the guy was a genius. The guy noticed that the market has different time frames. And as a trader, you need to use different time frames. And this is huge, guys. This is huge. If you don't use different time frames and you're able to locate the cycles and the trend in every single, send the grand super cycle to the minutes, you lost in the market, right? Because otherwise you're gonna get present surprise. I'm gonna give you some example. 2 years ago, we did a free seminar. And we say the euro ended the cycle from 2014. The euro will be supported, and this is an opportunity. The euro should reach 120. Guess what? Since we did that seminar, the euro stayed sideways and still is sideways for over a year and a half. How do we knew that? Because we are not looking at most traders, we were not looking at wave 3 of 3 of 3 of 3. We were looking at the weekly cycle and the target that was reached in the weekly cycle. And we're going to cover that down the road. But this is very important for OUR, that you guys need to understand that the market runs in different time frames, that the market works in cycles. And that's one of the biggest assets that the Elliott Wave Theory provides to you, the understanding of the cycles. Without cycles, you're lost in the planet. It's like now the S&P. It's funny. Everybody's been picking a crash in the S&P for the last 5 years. Now everybody's bullish. I was telling members yesterday, it's funny. Now everybody's bullish in the S&P. And guess what? Now the S&P is reaching a cycle, in a super cycle, is reaching an 100% extension. And everybody's bullish now because the Tron rally. Now, traders that understand the language and the cycles of the market should do understand that, yeah, it can extend. Yeah, S&P can see 3,000. It can extend, but you need to know the waters that you're fishing at. Now, that's how the market works. Cycles are huge in this profession, and relating the cycle is huge because otherwise you are fishing without knowing what is below, what you're looking for, or what is there. You need to know where you put your money in, because money is pretty hard to earn, right? Don't you guys agree? So don't give away the money so easy. And I repeat, nobody's perfect. Elliott Wave forecast charts are not perfect. No human can call the market perfect. But at least when you run, you adjust. When you run, you know where you stand. When you run, you know what is the A, B, or C of you being wrong. Our members know that. They know that when we run, we say, okay, it can be this or this, because we're looking at different cycles. And that's huge, guys. Keep an eye always in the different time frames and the cycles, because otherwise it can get you. He used this as a main language, that's the one that we use, which is the degree. What do you mean 80-90% correct so far? Don't understand, Christopher. So the degrees are how we use, and this is the language. This is the language. And I hope you guys understand that this is the language. He say in a grand super cycle, you use these letters. In the minute, you use this letter. Oh, exactly. You are a member, right? That's true. That's what a member say. You guys can see the message right there. Because nobody can be 90%, but you can beat the market 80%, 75%. Guys, enough to make money. Because with the right money management, you kill it. What the member says that Elliott Wave forecast charts are correct 80-90% of the time. It depends on the time frame. I can not say to you guys that you always gonna have 80% in the 1 hour. The market always gonna find a way to hamper you. 1 hour sometimes becomes very erratic. Like we always say, there is over 8,000 oscillation of 1 hour in a year. There is 1,200 in the 4. there is, of course, 365 daily charts in a year and 52 weekly. The lower the number, the more reliable your charts are. Most of your traders want to trade the 50-minute mode. Guess what? There is over 30,000 in a year. So the higher the number, the less probability you have to be right. And all depends sometimes of the market conditions. We plays a role. And that's why you need to be very smart in the selection process, understanding which instrument to trade. Yes, the euro soared over the last 2 weeks. Guess what? Elliott Wave Forecast members never were told to soar the euro. I cannot, right? Yeah, we call it the drop to 110. The people give up, we call it to 106. The people give up, we call it to 104. But we've been telling members to trade the clear structure. Which one was? Buying the dollar cap, which at the end is buying the dollar. Why? Because the cycles, because the sequence make us in that direction. So this that you guys have over here is the language, that we use. All right? Any questions so far? Any questions so far? Everybody understand where we're coming from, right? What we're doing, how we're doing it. Now, I'm going to show you guys now something that we already show you, which is the subdivisions of the market. Key, this is 5 ways. The same way that this is 5 ways. This cannot be a 3 ways and then you call it 5 ways. Why? Because this was a strong. No, that's a no. So technically, over here, you have to have subdivisions on 5 and every single subdivision. That's what Elliott say. That it have to be 1, 2, 3, 4, 5 makes 1. 3 back. 1, 2, 3, 4, 5 makes 3 over here. It makes 4 and 6. Everyone needs to be a subdivision. This cannot be a 3. This a 5. It cannot work like that. Right? It cannot work like that. Everything needs to be in 5. A wave in an impulse wave is subdivided in 5 waves. Wave 1, 3, and 5 are themselves 5 waves. Wave 2 cannot pass the beginning of 1. Wave 3 cannot be the shortest. Wave 4 cannot overlap with wave 1. I'm going to give you new rules at the end. This is the basic stuff with some input, with somebody that developed and create a servers almost 12 years ago that is gaining a space. Why? Because the guy is running a BMW. I'm not running a 1930 Chevy. I don't like them. I like progress. I like Apple machines. I cannot work with the same computers when I was doing my mechanic engineer and I was used basics as a programming and I used those tape to put the data in. No, I like the maths. Beautiful, nice, powerful. Don't use Elliott Wave like a 19 Cherry or like those old Toshiba machines. Use the Mac, use the BMW. That's how it is. Because otherwise, you're going to get lost in this jungle. That's the way it is, guys, honestly speaking. So that's the basics of the 5 ways move right there. All right? Now, any question? Everybody understand that each way needs to be a 5. And I'm going to show you down the road examples of why so many times you see, this is famous in the euro. Wave 3, 3, 3, or 3. Every time that the euro drop, wave 3, 3, 3, or 3. Guess what? in 2012, the world is coming to the end. It comes wave 3 in the euro. We say the euro goes to 139. Boom, the euro went to 139. Why? Because it wasn't wave 3. It was, in your eyes, a corrected WXY structure. Why people didn't saw it? Because they're writing the 1930s. And open the mind, all right, about that. Now, let's keep going. This is the wave 1. What create the wave 3 acceleration? That when is an odd trend, right? Remember, look, this is 1, 2, 3, 4, 5. You got 3 waves. Everybody that is buying, you put the stop. When you buy in this dip, you put the stop over here. When you run, the stop becomes a sell order. And that's what create the wave 3 acceleration over here. And that happens. And that's why you see the gaps that usually happen with the wave 3. This is basic Elliott wave. Wave 1 is always choppy. That's what you need to know about wave 1. It's always choppy. Why? It is a new cycle fighting with the old cycle. Always get choppy. Because the old ones doesn't want to end. And the new one is starting to jump into the market. Now, wave 2 always are, most of the times, are deep. Why? By nature. Because the old cycle say, okay, we got them. When you comes over here and you get back to the basics, Elliott wave structure, and you go over here, remember, and I'm going to use the ABC as a sample. This is a new cycle over here coming from this peak. Everybody agree with me? That's a new cycle coming from this peak. This is an old cycle. This dip is either wave B or wave 2. What's happening? That this new cycle comes in the direction to the previous one. Always deep, always powerful. Why? Because there is a trend here. Now, you need to have a tool that say this cycle ended. And you can trade here. We have that tool. We call that distribution. And distribution is something, is a system that we develop based in physics that is related to a speed, momentum, and the time frames related to the time. In other words, it's not the same if you travel. It's not the same if you travel, let's say, 100 points in an hour, maybe nothing happened. But if you travel 50 in an hour, when the distribution of the speed and the momentum are more equally, guess what? Many things can happen. And that's why sometimes you guys see that this is very popular among commodities. That the commodities, when they top, usually they go strong. And then next day they reverse. That's because it's a fake distribution. And that's how we've been able over the years, and this is proof, this is public record. We've been able over the year, for example, in this chart of the euro, when the euro was over here, and all members here of Elliott Wave Forecast can support that. We say the euro goes to 139. Yeah, over here we say 144, but we say 139 because we first say 137, 135, then 139. Why? Because the euro is over here. This candle break the distribution. When the euro was over here, we told the members, don't sell it anymore because this cycle ended. That's called distribution. And that is the tool, that is the tool in the distribution. I did something wrong. I'm sorry. Let me get back down here. That is the tool that is technically, one second. That is the tool, my bad, that technically is telling you when the market is here that this cycle ended. But like I say, and getting back to that stage, wave 2 always is powerful, always is choppy due to the fact that the old train want to renew. Now we keep going and we got the power for wave 3. What is the power for wave 3? The old cycle give up, the new cycle jump in. That create the wave 3 of the market. It always powerful. 80% of the time is the most extended one. Most of the times it passed the 1.618. And this is a new rule. Do not ever label a wave 3 if you don't reach the 1.618 extension. Otherwise, you're going to be in the wrong side of the market and it's going to become an ABC. I give you a live example here, and the live example is the S&P. Everybody knows that Elliott Wave forecast has maintained a bullish sequence in the S&P and a bullish core. We're pretty close to our target of 6 years. And guess what most of the 1930 Chevys has been doing? They has been fading a wave 3 of 3 of 3, the real one. And how? Because look, over here, the moment that the S&P it took these highs, that's it, game's over. So you know that you're going to this area. Now look how nice it is. 1, 2, 3, 4, 5. A flat, look at the C wave, 1, 2, 3, 4, 5. Then you have another flat here with 1, 2, 3, 4, 5, a running one, and then you got 1, 2, 3, 4, 5. Then from here, you got in red, 1, 2, 3, 4, 5. And then from here, 1, 2, 3, 4, 5. Everyone passed the 618. In red, of course. In the black, of course. In the blue, also, of course. Now, like I said earlier, when the wave 3 it ends around 1.618, wave 4 usually goes to the 3802. Then you go here and you're gonna see how when it dipped, it was very close to the 3802. Why? Because, and this is something, Mr. Merkel, this is something that most traders do not understand. This is the 3802, and over here, the old Elliott Wave, that's your buying area. The new Elliott Wave, you go and you say, okay, it bounced there, no, because nothing. It's because it reached over here, the buying area that you zooming in over here. And that's, which is the 100 and the 1.618. That's the buying area. I can show you guys an old chart of the S&P over here. Let me see when I have it, which is to our members from 2014. And you guys gonna see how that is part of the, at the end, I'm gonna be showing you guys that. Let me see if I found the chart. But a chart calling that pullback right there very nicely, which is this chart. You see, we knew that this is when we end and that we're gonna do the wave forward pullback, right? And technically it play out like that. Why? Now, why it didn't reach the 3802? I guarantee you that if you do the math like this, and this is very, very deep, right? Look at the 3802 over here, everybody. Ideally it was 1723. The reason why it didn't reach it is because you see how the 618 comes here. If it passes here, it's going to miss here because it's a balance against the 1. So that's how the market works. But this is an impulse, a classic impulse. This is the power for wave 3. And that's why we've been laboring, and that's why most of the 1930 Chevys has been calling a crash. And the market keeps advancing. And I repeat, if you use Elliott Wave, why are you calling a crash? You want me to give you the hint why you calling a crash? I know that. I was there. You're calling a crash because of this. Because when you look at the S&P, you see 5 waves from here. 1, 2, 3, 4, 5. Elliott Wave betrayed you there. Because when you see the 5, what do you get? You say, okay, 5 needs to be followed by 5. Guess what? If you don't know about sequence or have distribution, it's valid that you call in a crash. And guess what happened? When you find out that this peak give up, automatically you go with the math, and automatically you say, okay, if this peak give up, that means that at least I go to the 100% extension, which is 1629. It's about the previous. That's it. You need to adjust, and you say, this is an impulse, and that's how it's being played out nicely. This chart of the S&P and Elliott Wave forecast is amazingly, I haven't changed technically, I believe, the count, I think once in the last 6 years. The same count in the dailies and the weekly. Once we tweak a little bit to a corrected higher, but the direction is very clear. Same direction for the last 6 years. Why? Because we didn't let ourselves get blindly by the 5 waves from 2008. That's when the old Elliott Wave betrayed you. You need to do that adjustment, right? Your wave B is more than the 138 or 2. Which bay? Okay, which one? This one? It doesn't matter. It's a flat. 3, 3, and 5. You see 5 waves here, right? What he's saying is that the wave 3 passed this, assuming, if I read it right, it passed 138 or 2 here. That doesn't matter, my friend. It doesn't matter. It doesn't matter. It's a flat. 3, 3, and 5. You see the 5, right? Don't you see the 5? There. 1, 2, 3, 4, and 5. Then you see the 5, right? That's what we're calling in a flat. That's what we're calling in a flat. You see how deep this is compared to this peak? You see that? That's a flat. And what do you mean a double zigzag from where? From here? Listen, Elliott Wave is a language. A double zigzag from here? And this decline? No, you're wrong. You're wrong. There is 5 swings there. 1, 2, 3, 4, 5. You're going to see at the end of the seminar why you're wrong. That's 5 waves right there. 5 swings. Let me get back there in the shorter cycles. 1 second. You see the 5 waves? 1, 2, 3, 4, and 5. You see it? I'm sorry, right here. 1, 2, 3, 4, and 5. You see it, Dan? That's not a double zigzag. This cannot be a wave 4. This has nothing to do with this. You follow me? So that's what is labeled like that. Believe me, in a very humble way. Internal counts as a 5, yes. As a diagonal wave 5. As a diagonal wave 5. Let me get back to you. Believe me, my friend. I mean, it is there. Otherwise, we won't label it. This is a subdivision of 3 weights. Another subdivision of 3 weights and another subdivision of 3 weights. Technically, you have 11 swings right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. That's a diagonal wave phi right there, with momentum in the 5th wave. You follow me? It's a diagonal. You know what a diagonal is, right? That's a diagonal. So let's keep going. So technically, what I'm trying to say is that wave 3 always is powerful. Wave 3 always is powerful. And wave 3 is gonna get the best of you. In other words, that's the idea trade. That's the trade that you should always try to write. And you should be okay at anticipating the wave 3. Now, wave 4 is a profit taking. Everyone that I take, one second, Christopher, I got a question. I say at the beginning, ask me about the topic, because otherwise I lose the flow. So wave 4 technically is a corrected profit taking of this rally, and by nature is consuming time and corrective and overlapping. Now we got wave 5, very important for waivers there. Understanding that wave 5, I don't label truncation. That's one of the things. For me, truncation is a justification of the waiver to avoid the adjustment. Elliott Wave forecasts do not label truncations. I need to label 5 waves. The wave 5 rally needs to break the peak of wave 4 or wave 3. I don't label truncation. Wave 5 needs to be minimum 1.236 inverse wave 4. Wave 5 needs to have lack of momentum compared with wave 3. If it erases and doesn't have momentum divergency, it's no wave 5. So it's corrective. Wave 5 waves in force always end with divergency. And we get back to the beautiful S&P right here. And look, the weekly RSI, look how nicely it is. Look, the powerful wave 3 of 3, how it's showing momentums. That's why the Trump rally comes with a big question mark right there, because that enormous momentum. And because I got the minimum amount of swing, I don't know if we're going to stand within wave 5. It can stand, yes, because wave 3 wasn't extended. But wave 5, whatever the S&P does, we are in a wave 5 right here. The same way that we were in the wave 5 over here, related to this one. Something. This related to this one. You see how you're getting momentum divergency. Wave 5 needs to have momentum divergency. If do not have momentum divergency, it is not, and absolutely is not, a wave 5. Everybody with me? It is not a wave 5 if do not have momentum divergency. And I want to be clear, you need to upgrade and downgrade the RSI, because it needs to be momentum divergency. If you're looking at the weekly chart, it needs to be momentum divergency. But that move in the yearly chart or in the century chart, it won't show the divergency there. That's how the market works. That's how we do it. Those are new rules. Elliott didn't talk about this. He didn't have the RSI. He didn't have tools to gather momentum divergency. What he noticed, that the wave 5 was weaker compared to the wave 3. Enough for the 1930s. Enough. But we have the tool. Why we don't use it? I'm going over the old stuff. I'm going to cover the new stuff down the road. That's what I say at the beginning. So, because you need to understand the old stuff to be able to be, I use the 13 period RSI. You need to be able to understand the old stuff to be able to use the new one. If you are not an expert in the old one, you cannot use the new one. Don't you agree, TJ? That's how it is. Now, corrective patterns. One of the things that I don't like about the old theory is that everything is being, it goes around, put it this way, it goes around ABCs. Not big that, not everything that correct is an ABC. You can have a flat, yeah, it's an ABC. But you can have also a WXY is corrective, and you can have phi, and guess 3 what? And guess what? I'm going to ask you a question, and I want members to answer the question. What do you guys think that every single 5 weeks becomes at the end? Anybody there? That is not a member. Members maybe knows that. Dan, Francesco. Every 5 weeks, what do you guys think that it becomes down the road? Nobody knows that. Because that's new Elliott Wave. That's new Elliott Wave. Panos, you doesn't count. That's new Elliott Wave. You're very good. Caris, right? Caris, I think that's your last name. Every 5 weeks becomes a tree by nature. Because the nature of the market is not 5 weeks. That's when Elliott is wrong. The nature of the market is 3 weeks. Because every 5 weeks ending being 3. Otherwise, the market is one-sided. Always goes in one side. And I give you guys an example. I give you guys very good. I give you guys an example. You go to here and you look at the S&P over here. Beautiful 5-way move. Beautiful. Beautiful 5-way move. No question asked. It's 5 weeks. It's 5 weeks. 1, 2, 1, 2. Another flat over here is 5 weeks. You're going to see, this is the weekly RSI. That's why you don't see, but you're going to see how, this is 5 weeks, right, Caris? You agree with me that it counts better as a 5. Right? Guess what? Those 5, if I upgrade, and I'm going to contract it not to make it look, if I put the yearly chart of the S&P, I knew that it's going to happen this. Let me contract it here. These 5 weeks coming from 0 are becoming part of an ABC, a corrected structure. Everybody understand the concept? It's going to become an ABC. 5, 3, and 5. So the 5 becomes a 3. That's what we always say. There is more probability for you to be wrong if you look for 5 than if you look for 3. Because if you look for 3 by nature, the nature is in your side. That's things that we have developed that is not in the book, in either of the books that have been reading about Elliott Wave. Right? So every 5 becomes a 3. Now, the S&P so far doesn't have too much extension compared to this peak, right? It doesn't have too much extension. It's just reaching, I'm going to use this, it's going to look better. It's just reaching our target at 2220 area. Now, like I say, the worst trade in the market is fading the indices. And a smart trader, instead of selling the S&P, this is how we different. Instead of selling the S&P or telling the members to sell the S&P, we go to our members and say, listen, pick a yen pair, sell the yen pair. It's the same trade. If the S&P crash, the dollar yen gonna go to 70 or below 70. If the S&P crash, if the S&P is gonna do a wave 4 and a 5, which is possible that it does something like this, guess what? You got the dollar yen here, you put it on top of the S&P, then if the S&P crash, the dollar yen crash. If the S&P do a 4 and a 5, the dollar yen will do this. So you trade the dollar yen instead of fading and calling a crash in the S&P. And that's something that we do every single day in Elliott Wave Forecast. But if the S&P gonna do a 4 and a 5, which is possible, guess what? It's gonna do this. And it's gonna do this. And one day, it's gonna go a big ABC from here. Because every single 5 weeks become an ABC down the road. Because the most one-side market that there is in the market is the indices. They're always bullish. In the yearly time frames, the human nature is the index is bullish. And they do corrections. But at one day, they're going to become a big ABC. So let's keep going. This is why wave 5 always needs to have divergency, like I say. And also, now we talk about ABC. ABC is nothing more than 5, 3, 5. And this is something when I don't get it neither. Because many waivers, they see a decline in 3 weeks and they call it A. No, if it is 3 weeks, it's not A, it's W. Because it's 2 cycles of 3 or 5 weeks or 2 cycles of 3 weeks. Not everything is 5, 3 or 1, 2, 3, 4, 5 ABC. No, sometimes it's 1, 2, 3, 4, 5 WXY. And that's how we do it. That's how we see the things. We label both sides. Most of the 1930 Chevy and the theory only label one side. 1, 2, 3, 4, 5 ABC. No, we label 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5 WXY, and we also label WXY, WXY, WXY. Because we have the open mind. Hope you guys understand. Now, so an ABC is a corrective matter when each leg of an ABC needs to have 5 weights. Each leg needs to have 5 weights. Otherwise, it's no. This is an ABC in a picture. Let me show you. This is an ABC. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Same rules that apply to the 5 weights apply over here and apply over here. It needs to be subdivisions of 5, subdivisions of 5. If it's not like that, then it is not an ABC. Everybody got it? Now, let's keep going here. Now, this is what we call the third way extension. These are the basics. Third way extensions. This is the third. This is the fifth. This is the wave 1 extensions. It goes like that. Sometimes, not always the wave 3 is the most extended. Then this is the third wave. You see the subdivision needs to be subdivided. This is what we call an ending diagonal in the basics Elliott wave. Ending diagonal appear in wave 5 or in the C wave of a flat, accordingly to the old Elliott wave. In the new Elliott wave, ending diagonal applied in the C wave of a flat, in the wave 5, and also a move can be an ending diagonal in 5 waves, and the rules are the same, only that we have tweaked that you can have overlap in and impulse. Why? Because the market is the one calling the shot here. The market, and this is something that my mind always has done. Elliott, great. He didn't left. He tried to force the hands on the market, calling that everything is a 5 waves and that everything run in 5s. We let the market calling the shot. Why? Because for us, if the market wants to run in 3 ways, we run with the market. At the end of the day, the market is your boss. He's the one calling the shot, not you. You just need to ride with him. Everybody with me? Everybody understand that concept? Clear, right? So, that's a diagonal. That's a diagonal over here. Now, we keep going. This is what we call the leading diagonal. It's a different subdivision. The old Elliott Wave say that it has to be 535. I can make a case to you guys that a lot of leading diagonal having the same subdivision of 333. And TJ, as you notice, I've been saying new things relating to the old one. So you need to watch again the seminar and take notes, right? Even though we're gonna, show a lot or cover a little bit more at the end, right? So that's the leading diagonal. According to the OR, it needs to be 5, 3. Each subdivision needs to be in 5. For us, doesn't matter. This is an ending subdivision in 3. You can get a leading with subdivision in 3 also, right there. Now, this is the typical ADC. When you have 5, 3, 5, it's corrected, and each one by nature is 5 waves with divergence here. This one cannot be the shortest. The B wave needs to be in 3 and usually ended around the 100% in the C wave. These are the flat. Everybody knows the flat. Everybody has the flat. I understand that, Dan. I understand your topic. This is what he said. But we follow one thing, Dan. And as a rule, in Elliott Wave forecast, we don't label flat against the trend, right? What do you think is the trend of the S&P? Higher or lower? The yearly trend, what do you think it is? Higher or lower? And Dan, answer. Higher or lower? The trend of the S&P? Higher. All right. So what are you going to call a flat? What are you going to say that this is a flat? It doesn't make sense. So in Elliott Wave forecast, like I said earlier, we go with the natural course of the market. And the natural course of the market has a clear-cut target in the S&P from 2220 to 3000. That's the natural target of the market. Why I'm going to call it flat? Because I want to call it crash? No, I'm better than that. So for me, and members know that, when the S&P is going to drop, I'm going to let it know it's going to drop. Like our members knew over here, and it's probably record, that over here we were ending a cycle and that they're going to be a 3 waves per back. You know who told me that? It wasn't the S&P. It was the Nifty. Because in Elliott Wave forecast, Dan, we believe in one market. So for me, if the Nifty is at 100%, I cannot pretend the S&P to extend too much. And that's how we do things. So Elliott Wave, like I say, is suggested. You can make a count for whatever you want to see. Don't you agree? Usually when I do the live seminars, I always joking with members. And I say, hey, listen guys, and I give you something for the future. I say, okay, the S&P either ended over here at 2220 and crash, or the S&P, this can be wave 105. As far as this pivot remains in place, and this pivot remains in place, Elliott Wave forecast won't call a crash. Because computers won't call a crash. Computers doesn't know Elliott Wave, Dan. What they know is that when the S&P to this high, the sequence become bullish. So technically this high, it gets invalidated. And it's looking for this area. That's how computers trade. That's how we label, my friend. I hope you understand. All right? So flat is dangerous. Why? Because flat is the most used tool to people with bias to not make adjustments. And that's the reality then. And that's when flats are a killer. Flat always gonna get you. I know everybody can make a running flat in the S&P. Be my guest, if you're calling that. I'll go with the natural count. ABC from the lows because there is no extension. Let's see what happened between 23,000. That's how we label different. We label as a machines. We don't label as a humans. Because Elliott Wave is a language. Is a language. I can tweet the count of the S&P in 3 different accounts, and when I joke to my members, I say, it's a matter of seconds. Elliott Wave is a language. It's just a language. So that's a flat within that language. Right? Now, this is 2 seconds only. Yeah, panels, like I always say. This is a flat. It's technically 1, 2, 3, 1, 2, 3, and 5. That's what the S&P did in 2008. Nobody saw it. Because people don't make adjustments, Leon, like you and me, we talk in the past. And adjustments are part of the deal. Because you see that structure there, 3, 3, and 5. Textbook, guys. Textbook over here. 3, 3, and 5. Why nobody saw that? Because the war is coming to the end and we need to call a crash. Interesting, Dan, right? Interesting. This is a flat. Textbook. Textbook flat. Right there. Look at the divergency right there. So don't force the bias, guys. Adjust if you're wrong. Don't force the bias. Now that's a flat. Textbook flat. This is another type of flat. This is a running one. Same with this one. And these are the triangles. Triangles, accordingly to the old theory, always happen when a cycle is ending. We don't agree with that. When it's an impulse and you get a triangle in wave 4, of course, it's gonna end regardless. If it's a triangle, if it's an ABC and wave 4, if it's a WSY, or if it's a complex correction. In the new Elliott Wave, triangles are only a consolidation. It can be an X wave, but that doesn't mean that the cycle is ended, because you can have an X wave, and guess what? Is it gonna do WX? It goes down in the Y, it does a double X, and the cycle didn't end. So I know that's one of the things that we don't agree with the books that say that triangle always appear when a cycle is ending. I don't agree with that. It depends. If it is a wave 4, yes, it's when it's ending. If it's a corrected sequence, it doesn't mean anything. It's just a pullback. It never can be a wave 2 and then 5 waves. That's you guys need to do that. These are the different type of triangles. This is the contracted. One thing that we also have added to Elliott Wave, in a contracted triangle, the RSI on momentum needs to be contracted. Never label a contracted triangle a contracted triangle, and we're going to prove it you guys down the road in the next 40 minutes that when there is no contracting in either side, it is not a triangle. It is not a triangle, right? Now, those are triangles. This is a double tree. 1, 2, 3. It was a flat in this case. Can be an ABC, can be a WXY. A connector and another way. This is the most typical structure in the market. If you trade forex, you better learn a WXY. If you trade commodities, you better learn a WXY. If you trade index, you better learn both. But most of the index, when most of the five ways are seen in indices. So that's a WXY is a three-way, is a 7-swing structure. And that's when the famous 3, 7, and 11 comes in place, right? And we have, Christopher, that you asked me, 1, 2, 3, 4, 5, 6, 7. That's a double tree in Elliott Wave. This is the most common structure. Again, WXY. This can be ABC or can be corrected WXY. I mean, usually 100% here, 5618 here, and 100% from here, and 100% here. Sometimes truncate. And for us, what we use as truncation is when we don't reach the 100. We don't use the wave 5 truncation. That's the old Elliott wave. We don't use that. For us, truncation is that it didn't reach the 100% in the Y. You see, TJs, I've been showing you guys a lot of things that we use different. Again, this is a bullish WXY. Now, over here, what we have, one second. Let me get down here. What we have, I had shown you guys already, technically, the basics of Elliott Wave. Any question in the basics Elliott Wave? Any question? Everybody knows right here what is a 5 waves, what is a 3 waves, what is a triangle, what is a flat. Every question. Everybody do understand that 5 waves needs to follow a subdivision of 5s. That wave 5 needs to have divergency in wave 1 and wave 3 and wave 5. Like the S&P. Everybody understand that, right? Everybody understand that in a 5 way. Otherwise, it is not a 5 ways. Otherwise, it is not a 5 ways. And don't be afraid to label 3 ways. Otherwise, the market, you are in the middle of the jungle. Somebody's going to take your money. Because computers do not know Elliott waves. Computers. And I'm going to show you guys charts proving that this, and you see this rally in the S&P has nothing to do with the elections in the US. Nothing. It bounced perfectly from the 100%. You know the Brexit from UK is so perfectly from the 100%. What a casualty. We in Elliott Wave Forecast, we don't pay a single ounce of attention to news or fundamental. We trade and try to trade as computers when all it matters is areas. When all it matters is seeing the market as a one market. That's what matters here. That's what matters here. Now, let's start to the good stuff right now, even though we have shown a lot already. Elliott Wave, adjustments. And we apply the same rules that the old theory, only that we adding things. For the better. Progress, guys. Progress. You cannot keep riding a 1930 Chevy. Progress. Progress. I don't know how many of you guys have ride or have drive a car from 1950s. I was born in Cuba, so I have a good experience about it. How many of you guys have drive? Any of you guys have ever drive a 1950s car? Not in the States. Not in the States. Because in the States, you got everything to make it look good. Any of you guys has drive an old car? Listen, the running is not the same. You feel every single stone in the street when you ride in one of those cars. The direction is very strong. Not as soft that with a single finger you move a BMW. You got no AC. Let's start with it. Why are you going to be laboring and using an Elliott Wave that is running with those qualities? Get better. Go with the human nature. Get better. Get better. All right? Now, what we have done here, guys, I'm not talking about the market. Don't ask me what's going to happen with the dollar yen. Don't talk. This is a free seminar about educational. And how do you identify turning points? When you reach the areas and you use the distribution for that, Marie. So what we have done here, adjustment. The reason for the adjustment, market today is ruled by the high frequency trading machine. High frequency trading machines do not think like humans. They are computers. They do not have emotions. All right? High frequency trading machine is based in a code that is programming in the market that say when it reach this area, it's bonus time. When you reach bonus time, they say that the pound, this is the Brexit Elliott Wave forecast chart. Let me see. On June the 20th, look, June the 20th, this is the area that we were showing to members that the pound would go. Why? Because these people give up. It did 1, 2, 3, 4, 5, 6, 7. Now, when the machine works is when they reach that area, Marie, when they reach that area, Marie, what's going to happen? They're going to reduce the time frame. And then they're going to go there, and this is the daily area. Then they're going to, this is the routing daily cycle. This is the daily area, and this is the 4-hour correction. And this is a 1-hour cycle. And the X is a 15-minute cycle, and the Y is another 1-hour cycle. What they're going to do is the moment that they reach the area, they're going to start reducing the time frame. And in the first break of the cycle, boom, the highest degree trend take over. That's how the market, that's how this machine works. And beautiful, every member of Elliott Wave Forecast sold the pound. Not because we have a buyer's dollar long, because it reached that area. How do we trade? From that area, we turn members. Two things happen. Either we go to new lows, or we do the whole process all over again. And we go 3 and then another 3. But this is what we call a no enemy area. That's what we call a no enemy area. It's an area when the market gets a string, gets some bonus times, and we go from there. Right? So that's how these machines think. How everybody understand, everybody knows what the high frequency machines are. All right? All right? Everybody knows that, right? So, the Elliott Wave is suggested by nature. Exactly, Karin. Elliott Wave is suggested by nature. You cannot put your money in Elliott Wave. It has to be Elliott Wave and something else. Elliott Wave needs to be part of something, no Elliott Wave. What the cars now are better. You didn't have a car in 1930 with computers. Now, I took my car to the dealership the other day. I find out that they have like 9 computers. Why? Better. So, Elliott Wave is suggested by nature. I mean, for example, a 5-way move can be a start of the new cycle, but also can be a way of a flat, suggested as a guess. Everybody was blinded by the 5 ways in the S&P from 2011, 2008. And I was one of them at that moment, I'll be honest with you guys. I say, oh, this can be a big way. But when I saw what the computers did, that it took the highs of 2010, I say, it's over. And I switch. Understanding and trading with this mentality is key for being successful. It's key. Identifying the areas. Elliott Wave Theory 1930 doesn't give you that. All right? You can always have a count that fit your desire. Now, why makes Elliott Wave forecast like that? Elliott Wave was discovered and formulated based in the Dow Jones. That wasn't based in forex. Forex has a different nature than the Dow Jones. Commodities is a different nature. So you cannot base a theory only in one instrument or in one group. That makes it fail. Also, markets are different now than the 1930s. We have computer trading millions and millions of dollars. Programming. Have you ever guys think how it's possible that the market from Sunday 6 p.m. or my bad, Sunday 12 p.m. Eastern time or EDT on to Friday 6 p.m. EDT, the market do not stop for a second? Do you really think that there are people trading every single millisecond in this market, in this world? No, guys. There are machines that do not need to sleep. Have you ever guys think that? Exactly, Marie. Exactly. Exactly, my friend. Because you've been riding a 1930 car. You agree? You've been riding that. And no, it cannot be like that. Time had changed. And the high frequency machines also have changed the nature of the market. So you need to adjust. And that's what we've been done in Elliott Wave Forecast for the last 7 years, saying it gets more obvious. All right? That's what there is the need of the adjustments. And this is like a typical example, Marik. I mean, he's being honest, say that he's been struggling for 3 years. Now he get it because I've been telling him. Now let's keep going. Now, this is some of the things. And there is always 5 o'clock somewhere. I got you. But at the same time, I tell you, one thing is being 5 o'clock. One thing is being milliseconds, TJ. It's impossible to process a retail order every milliseconds. I saw a report years ago say about a bank that out of 30,000, I guess, trade only lost 1 or 2. It's impossible. It's machines. You know what I mean? Machines. Now, these are basic things that we have done. The Elliott Wave theories, they all one say that the train always train in 5 and correct in 3s. Adjustment. Trend can be in 5 or in 3 sequence. Wave 3 must not be the shortest of the 5-way move. Adjustment. Wave 3, unless it's a diagonal, it have to reach 1.618 of wave 1. It has to. It has to. And I want you guys to see my emotion in this. And you know why I get like this? This driving me, what driving me now to be emotional like this is what makes me discover all the things. And that's the fact. You need to write the BMW, not the 1930s. Now, wave 4 cannot overlap the wave 1. Wave 4 should not retrace more than 50% of wave 3. Huge. Huge. Why? Because when you bias and you go 1, 2, 3, 4, 5, and you're chasing the 5, if you follow the old rules, by the time that you reach, if it's an extended tree, the time that you reach the top of wave 1, your margin call comes to you. Boom, you got no money. Rules. When you see a wave 4 at 50%, 80% of the time is not a wave 4, even though it can react, unless it's the diagonal. Wave 5 often comes with less in volume and lack of momentum. Wave 5 must, we're changing the word often to must, without RSI momentum. Best period 13. Triangles needs to be contracting in price. Triangle needs to be contracting in both price and momentum. Mostly invalidate levels to negate the structure. We have a system that we own the copyrights, which is telling us when a cycle ended. To these rules, you can add a lot, like wave 3 needs to be 1.618, that every single wave 5 becomes an ABC, that a bunch of things that we have done and we have said over the last hour and a half. But these are stuff, of course, honestly, and don't get me wrong, we are a business. As a business, we don't show everything the way we do it, because if the code is gonna show the formula, nobody buy the code. You do it in your house, right? The same goes over here. But we have all the tools, like the distribution, like the count sequence, like the cycles, to understand how we are and how we do it. But this is basic stuff and the change in Elliott Wave. Also, I'm going to show you guys some examples. This is the 5 waves in the S&P I already showed you. And this is classic Elliott Wave. This is the euro, right? This is the euro over here. I don't use moving average. This is the euro over here. And this is the light chart of the euro over here. When the euro was over here, right? When the euro was over here and the euro dropped over here, is this picture, right? Is this picture. When the euro did this, here we go again. This is wave 3 or wave 3 or wave 3 or wave 3 or wave 3. This is wave 3 or wave 3. You know what Elliott Wave Forecast told members? Don't fall into that trap. It is corrective, and it's going to bounce like it did. Because in the election night, Elliott Wave Forecast members was buying euros and the rally, right? We told members, why corrective? Because if you look at this is the key, guys. 1, 2, 3. Don't you guys agree? Everybody there? You guys agree, right? 1, 2, 3 over here. Yes, the selling was strong over here, but at the end is going to fail. Why? Because 1, 2, 3. Right? Everybody with me? 1, 2, 3. 3 waves here. It's not 5 waves, and it never was a 5 waves. Another example that is based in the Aussie. When Aussie was over here, our chart was calling lower. Why? Because yes, you look at that sideways consolidation and you say, don't you guys agree? Elliott Wave, a bullish triangle? Yes or no, guys? It's a bullish triangle. Nothing say otherwise. They all want say a bullish triangle. Guess what happened after? Aussie broke lower. Why do we knew that? How do we knew that? Because when you look at this low in the RSI, over here is lower like this. Triangle goes trash. Cycle is not bullish. It's not a bullish triangle. We were calling it lower. Based in the new theory. That things happen in the market every single day. Another example, New Zealand, a valid triangle. 1, 2, 3, the triangle. Look at the difference, how it's contracted here. On the other hand, it is not contracted there. Everybody follow me, right? Those are tools that we use that allow us to be in the right side. Because at the end of the day, trading is not about S&P is going to crash, the euro goes to 0. No, trading is about being in the right side 80% of the time, because nobody is 100. If somebody say to you after the fact, we were right, yeah, it's true. But that's why I instruct, and I always told my employees, for time to time, show charts that did not work. Because I don't want to create the impression that we're perfect. We are not perfect. We are not perfect. Nobody is. But we are riding the BMW. I'm going to show you another good examples here. And I hope you guys understand the point. Many people bring Elliott Wave Theory in their mistakes. Guess what? The right mentality for Elliott Wave is a language, not a tool for forecasting the market. As it's part of the forecasting system. It's the language. It's the one that gave you the patterns. But it's not all. And in reality, if you look at Elliott Wave with those mentality, you're going to get out of the market. Waivers get lazy, even though we don't like it. They get buyers. They get lazy. They want to call the euro lower. And guess what? They make it a big deal that they call the euro lower now. They say, of course, it dropped. But over here, you need to tell your members, don't sell it anymore because it's going to rally. Over here, the same. Now, that's the way it is. And that's the way it is. And because of that, many traders lose because blindly put the faith in Elliott Wave from 1930s when there is something else, guys. We don't have the whole truth. Maybe we never will have the whole truth or the Holy Grail. We don't. But we are adjusting to the current times. And we, like I say, we've been presenting new ideas to make it better, not to deplement the old system, to make it better. But we understand in our mind how it works. This is the euro from 2008, guys. Question. What do you guys see there in the euro? An uptrend or a downtrend? Anybody there? Uptrend or downtrend? Same the peak in the euro. Anybody? What do you guys think? A downtrend or downtrend? A downtrend, right? Do you guys see 5 waves there? Honestly, do you guys see 5 waves there? Because I don't. Who see 5 waves in the euro? So how come an instrument, and don't you guys just told me that there is a downtrend. If you follow the old theory, a trend, the word related trend with 5 waves needs to go together. Don't you guys agree? 5 waves and trend is the same in the old book. Right? I don't see 5 waves there anywhere. So what does the euro have done? It's an ending diagonal. It's possible an ending diagonal from here. What does the euro have done? Look, very technical how this machine I see in the euro that goes. What is, okay, Dan, I'm going to pick you. You like to interact. What is the biggest connector over here? That's a 3-way. That's a 5, right, Dan? You agree with me? Yes or no? You agree with me? In the 3-way, what makes the difference? First, that there is no 5. Second, a 5 waves is the same as 3 waves, only that they doesn't have a 5, right? Most of the time. And that in the 3 waves, you don't get extension like you got in the 5. Now, this move for you then is a 3-way or a 5-way. That one. Look the connector in the middle. If that is a 3, automatically, guys, like Dan say, if that is the 3, the whole move needs to be a 3, unless it becomes a diagonal. But it cannot be 5 ways anymore. So you got a 3 in the beginning, right, Dan? Right here. Look at the biggest connector. What about this one, Dan? Don't you see another 3? With the biggest connector in the middle. Now look. Look at the 100%. That's what it bounced from there. You see? Now look. Another one with the biggest connector in the middle to the 100%. That's what it bounced there. Now look. I remember what's coming to the end here. 1, 2, 3, 4, 5, 6, 7. Biggest connector in the middle. Another 100%. Right? Now this one. What is the biggest connector? In the middle. Right, Dan? So, you want to know Elliott Wave there? I can make a bunch of counts there. I can make WX, right? If you are not so picky, you can say 1, 2, 3, 4, and 5. Or WX, Y, X, and Z. Other, you can go and say it is a flat, and it did A, B, and then A, B, and then 1, 2, 3, 4, 5. Right? So, it's a downtrend from here. It's a downtrend from here. Yeah, from here can be a diagonal. I'm with you on that. From here, but it's 3 ways from here, Dan. You agree? It's 3 ways from here. It's corrective. But how comes a corrective move needs to be in 3 ways? Because it has to be a trend for the move, for the instrument to drop almost 5,500 pips. So whoever you see calling 3, 3, or 3, or wave 3, or 3, or 3, that person needs to outdate his Elliott Wave knowledge, because it's wrong. 100% it's wrong. Of course, when it drops, it's going to go and show you the count. When it is no, it's going to hide. The reality of the matter is, guys, what I'm trying to do is, as a founder of this company 12 years ago, is open your mind. I know that most of you guys are no subscriber. Got it. Doesn't matter. We're doing good. We're receiving good karma here for our company. But we have a case that 5,400 peaks drop and no a single 5 weeks with the rules. No a single one. So all of a sudden, the trend is not in 5, it's in 3. So those are the things that we have done then in Elliott Wave forecast. And it doesn't matter if you bullish or bearish the euro. Do it right. Because I can tell you, I don't have nothing to hide. When the euro did over here, this is not 5 weeks. No. This is 3 weeks to equal X also. To the equal X right there, Francesco. Look, you want me to downgrade it? I will downgrade it to you. You see it there? In the daily. You see, put the RSI. The lowest is the low. Not 5 weeks. Can be 5 weeks here. This is a typical ABC. 1, 2, 3, 4, 5. And then from here, 1, 2, 3, 4, 5. And ABC with no divergence in the low is not 5 weeks. Whoever labeled that needs to go and upgrade the knowledge of Elliott Wave and write a BMW instead of the 1930 Chevy. And like I say, it doesn't matter if you bullish or bearish the euro. What it matters is when you're trading. And I don't regret, I call this law perfectly. But I know the year is sequencing the euro. And I have 1, 2, 3. I call this law perfectly. Our members were buying the euro when everybody was selling. We got it wrong over here at the peak. But we were selling here without a doubt. Because we have no buyers. We trade the market, not what I want. Because if you trade what you want, you're never going to succeed in trading. Look, this is the chart of the euro. Perfect. Look at that. 2014. Look, perfect. It went to the box and it stopped in the box. You see? So, like I say, it doesn't matter what you are or what you want. It's what the biggest dictator in the market, which is the own market, wants. But you need to know the areas. You need to get better. You need to apply these rules. Because Elliott Wave by himself doesn't work. 1930s doesn't work. People are going to show you what they get it right, not what they get it wrong. And unfortunately, it's gambling. Now, Elliott Wave himself is a 50-50 because the market is 50-50. With the new rules, you can get it to 70, 80s, 90, like some members say. And that's all you need with the right money management. And that's the reason of this seminar, is to teach you guys to get better. And nothing, I hope you guys, but the point is made that this is 5,400 pigs, 5,400 pigs, and not a single 5 weeks. Right? Not a single 5 weeks. I cannot open that chart, Dan, sorry. It doesn't allow me. The system that we use. So, that's the point being made. The recording is going to be available within an hour. 1 second. The recording, when you get the recording, read it, reread it. I mean, look at this table. Listen to my voice. Listen to the things that are being providing, and you guys are going to be a better trader, guys. And I tell you the truth, as I found it, and I don't want to make a selling pitch or selling or nothing. Make your own conclusion. Make your own conclusion. We provide a lot of free trial. Now we have the Black Friday, but this is not about selling. This is about good karma. This is about making the good. Like I say, making good. Our members know that we are a family. I know Panos, he knows me. I know Mirko, Leon. We talk family because what we try at the end is to get the best of the market, beat the market, make money, being professional. That's what we want. And when you do good and you share, God find the ways to help you out. Maybe most of you guys or some of you guys of the 100 members there become members. Take the offer of the Black Friday. Maybe. If you do it, good. If you don't do it, good also. My part is done already. My part is done already. So that's the seminar, guys. Open your mind. Open your mind. Get better as a trading. And all I have to say, what I did, I know that's smart in computers. All I have to say, if you guys really, really like what you hear, listen, when you pay the market to enter the market, you're going to lose. If you're trading to be a profession, you're going to pay a fee. Listen, either the free trial or the 50% Black Friday for you guys, right? And I'm not making as a sale, like I say, it is business, but thank you, Mohammed. This is the side. And like I say, it's not about selling only. It is a business. But like I say, if you guys want to get better, you guys like what you did, give us a chance. And that's all the selling that I'm going to do. I don't like selling in that direct way. I put my heart in this. You guys saw the emotion for 2 hours. That's my heart. But you're going to get that every single day. There is no in between with me. With me, it's either winning or misery. Either you are in, you are out. Either I give you all or don't give you anything. And we got 3 live sessions. We provide trading setups. We provide signals. We cover 52 instruments. And the best of all, we are in the progressive side of this market, not in the old cherry. And that's all, guys. Love you guys all. And see you guys around. Hope many of you guys become members. All right? So see you guys around. I cannot show the distribution system, no. I cannot show, yeah, the daily outdays is like this, Francesco. Let me show you. This is how we operate. And I'm showing this because somebody asked me. You see, this is how we operate. We got a 24-hour chat room. But I don't have access, you see? I'm the owner, I don't have access. That's funny. 1 second. I need to enter for another way. So we operate. No, we don't close on Thanksgiving. So we keep open because it's a U.S. holiday. You see, over here, members ask question about the market, like this guy is now asking question. We provide our dates and different time frames for the market. For example, this is the Euro Aussie. We've been selling. You can see the London, the Asia, the midday. You can see the 4 hour. You can see the daily with the boxes and the arrows. You can see everything, right? We do 3 live sessions. We give you a bunch of stuff. We give you quarterly report, yearly report, trend report, technical videos, a bunch of things, because we believe that the market is dynamic, Mohammed. So the servers, Francesco, the servers needs to be dynamic. Otherwise, it doesn't work. At the end of the day, a chart is an opinion in a specific time. It can change 5 minutes later. It can change 5 minutes later. That's why we provide those 24-hour support for you guys to know what's going on if the charts did not work. All right. So that is the idea. And if you guys like it, you guys want to be part of the family, yeah, the quarterly report usually we put it in place between the first 2 weeks of the quarter. So if you guys like it, take the advantage, guys, the free trial, or you guys can take the Black Friday that is gonna run onto the next week, and you save money there. All right, guys. So love you guys, all members, non-members. You need to love humankind, and good things happen to you. Have a good day, everybody.